Hey everyone, it's Jim. I'm a local realtor here in Boise, Idaho, and today let's talk about one of the most common things that comes up when I'm talking to anyone about buying or selling a home right now, and that's mortgage rates. All right, so I've pulled up some data from the St. Louis Federal Reserve. This is a good place to get really high quality data, and I'll link this information down below, but this is a good place to get economic data. So let's just talk really quick about where we are currently and where we have been. We are right now, the average 30-year fixed rate mortgage is around 7%. Um, that number actually was seen as pretty good all the way up until around 2002. You can see from this chart. Before then, this goes all the way back to 1971. It had never been that low in this set of data. Obviously, we got spoiled here after the 2008 timeframe when rates started to come down. They were in the they were in a band here between 3.5 and 5 for quite a while, and then in the COVID era, they everything went haywire, and they went all the way down at one point to about 2.7%. And so that increased affordability for a lot of folks that needed to borrow to get into a home. And then, as you can see, since then, rates jumped up over 7.5%. Right now, they're at about 7. So this is a situation where there are a lot of folks sitting on a home that they own currently who might otherwise be considering moving, but we call them rate locked. Basically, they are sitting on a 2.75 or 3% rate on whatever loan they have on their existing home, and they realize if they trade out of that loan, they're going to immediately be paying a tremendously larger amount more money for their mortgage payment. And so there are a lot of folks that are sitting on the sidelines. However, there is an argument. There's still a lot of homes transacting every day, every week when I go to the sales meeting in our office. I'm seeing people take new listings, people buying, people selling. There's still people that need to move, people getting divorced, people with life changes, people growing families or shrinking families. There are different circumstances, or people getting promotions, or whatever is going on in people's lives that causes them to move. And so there are still a lot of people that are deciding to move. I think also folks are just getting used to rates. And so now let's talk about where rates might be going here in the near future. Okay, so let's talk about where rates are predicted to head based on the predictions of some banks. So this is some information that I think I saw through a great real estate economist called Matthew Gardner, a chief economist. I saw him speak recently at a conference in Edmonds, Washington, and he's really knowledgeable. A great follow on Instagram or Facebook for more information on real estate economics. But as you can see here, um, this table shows information from the predictions of Fannie Mae, Mortgage Bankers Association, and Wells Fargo, and then averages them out. So no reason to dig into each of these numbers, but I would just say here's the prediction for the fourth quarter of this year, 2025. They are expecting the average of all three of these comes out to roughly 6.3%. So if the rates right now are somewhere between 6.7 and 7, that's down a little bit, not an entire point, but potentially down enough to convince some sellers to come off the sideline and some buyers to come off the sideline and go ahead and make a purchase with the improved affordability that creates. And I would also just say this you should also note from this that rates aren't highly unlikely to go down to 2.75 or 3 anytime in the near future. And so, I'm not a rate predictor, but that just seems pretty clear. Talk to any lender, and I think they'll tell you they're not expecting rates to be 3% anytime in the near future. So I would suggest, especially if you're a first-time home buyer and you're severely impacted by this, talk to a lender about some of your options. Maybe you can get into a first-time home buyer product that allows you to put a minimal amount down. Yes, you're still Yes, you're still locked into a pretty high rate compared to the past 15 to 20 years. But um, if you want to be a homeowner, then that just might be the what you have to do. Um, I would also suggest that if you're talking to a lender, look at what other products they have. I know we work pretty closely with Idaho Central Credit Union, and they have an adjustable rate mortgage product that is actually has a lower rate right now than the 30-year fixed. And so I know we all have bad memories from the 2008 recession timeframe of um, adjustable rate mortgages really harming people. But I think things are pretty substantially different now. And if you think that rates are going to go down or average below what they are now, average below 7% over the next 15, 20 years, you should, it might be worth at least considering the possibilities there. And so that's just what I wanted to say about mortgage rates for today. I appreciate you watching. If you have any questions about the real estate market, especially here in Idaho, I'd love to help you out. Please give me a shout, and look forward to seeing the next video. Thanks.